Oliver Slopes with Blue Line Futures in Chicago. And I was looking at your commentary earlier this morning and looking at, first off, some seasonal tendencies when we're talking about corn and soybeans. What are you watching there?
Yeah, seasonally, we see the corn market chop around a little bit here, a little bit more friendly on the soybean side. I think what a lot of traders and analysts and hedgers are looking at this week is tomorrow's WASDE report. I don't know that there's going to be a whole lot of new information to really move the needle significantly, but I think just that anticipation of potential uncertainty maybe keeping us a little bit choppy here to start the week. We obviously opened the Sunday night trade under a little bit of pressure, found our footing in the early morning trade, and now just kind of giving a little bit of that back. So we've definitely got a market here between buyers and sellers, which is good to see, especially from a trader's perspective. We'll see what tomorrow's report brings out. But if you kind of zoom out, ignore the noise, and look at the charts, the technical landscape looks pretty darn good still for that corn and soybean market, particularly the new crop contracts. Looking at December corn, 470 to 473 is going to be the line in the sand, or the hurdle for the bulls to get out above. If we can do that, I think the momentum could continue to spiral upwards. And then for soybeans, looking at that November contract, 1075 to 1080, that's the next line in the sand. The corn market has been the leader to the upside, both price-wise and fund money flow. They're dipping their toes in the funds in the soybean market. It'll be interesting to see if the beans don't try to buy some acres here and get funds more involved into the spring.
Hey, Oliver, let's hit on wheat here as well. What are you watching there?
Well, wheat's been the big laggard, and looking at the wheat-corn spread, it seems a little bit out of whack. So I wouldn't be surprised to see that corn market struggle and wheat play a little bit of catch-up here. A lot of traders watching the currencies very closely with regards to that. If the dollar continues to soften up a little bit, I think that'd be a tailwind for the wheat market, especially with funds short about 90,000 futures and options contracts. So that's still the one where funds are pretty aggressively short. If we start to get some bullish headlines, or at least mute negative headlines, I wouldn't be surprised to see wheat play catch up to the corn market.
All right, Oliver, hang on. We'll take a break. Be back in a moment as Market Day Report continues after this. Let's bring back in Oliver Slope, Blue Line Futures. Oliver, what's got your attention here?
Well, you mentioned the cash market for cattle softening up a little bit last week, and I think that's really kind of been the headline. You got the softer cash cattle trade. You've got the U.S.-Mexico border reopening for feeder cattle movement, and you've got funds with record net long position. So I think you saw some of the air come out of the balloon there and a little bit of a reset. We're rebounding this morning, which is great to see, but it seems like there has been a little bit of a narrative shift over the last week and a half with regards to the cash market and just bullish headlines in general. It seems like the market was never going to soften up again, and then all of a sudden you start to see the tide turn last week a little bit. It'll be interesting to see if that continues or not. If the cash market continues to subside, I wouldn't be surprised to see a little bit more pressure in some of these markets just on long liquidation and profit taking from the funds who've enjoyed a nice bull run here to start the year.
Yeah, looking at the 6 month for both live and feeder. And then we switch over and start talking hogs here. That's been a pretty impressive run.
Very impressive run. Every time it looks like lean hogs are going to back off and retreat, they make another push towards those contract highs. And that April contract, 93 to 93.60, looks like a brick wall where the market just kind of runs out of new buyers to feel that momentum to the upside. So from a risk-reward perspective, that looks like a pretty good selling opportunity. A break and close above there would be the tap-out point. But these livestock markets have been very exciting over the last several weeks, and we expect that volatility to continue.
Okay, talking about tapping out, will we tap out on the gold market, making some new highs there?
New all-time highs above $2,900 an ounce. I think we're up $45 or $50 this morning, and a lot of traders out there calling for the $3,000 level. So that's going to be a big one to keep an eye on. Silver has been a laggard in the precious metal space. If gold continues its upward movement, I wouldn't be surprised to see silver play a little bit of catch-up too.
All right, Oliver, great to see Oliver Slope, Blue Line Futures.